Alright guys, so let's talk about de-dollarization today. Now this is one of the biggest trends going on that we have to track. Now since the Biden administration, the move away from the dollar is getting worse and worse. The biggest narrative of the last few years was asset confiscation and the crazy money printing in 2020. Now, both of these are definitely serious problems and just dilute whatever confidence is left. However, there's now a new problem for countries, especially those that Trump doesn't like. And this now revolves around a trade war. It's something we must understand to realize the dollarization is only going to get progressively worse. Now, the rupee has fallen to a new record low thanks to Trump's 50% tariff on Indian exports. Now, this came from the left field, and I'm sure India never saw this one coming. I personally didn't think Trump would be so reckless to hammer India. Now, wasn't the plan to unite with India to counter China? And it's why this economic war is fast becoming a joke. But for India, the tariffs will be very painful. Up to 0.8% of GDP growth could evaporate. Industries from textiles to gems will be hammered, and that's going to put a big dent in their exports. Now, the tariffs on India is a big signal to BRICS that no one is truly safe. Doesn't matter what happened in the last administration with Trump, everyone and anyone is fair game. Now, when the tariffs hit you and you're unprepared, it wrecks not just your industries, but your currency as well. And it causes a lot of problems for the economy as a whole. Now, we can see the rupee getting devalued as the trade war continues with a big spike just a few days ago. At the same time, money is leaving the Indian stock market. In a single week, $500 million left because investors are facing a double whammy. Now, Indian companies could take a hit in their revenues. Meanwhile, as the rupee crashes, the underlying value of the stock also falls. It's so wild that even the rupee is losing value against the Chinese RMB as well. The conclusion is really simple here. India needs to diversify their trade partners. Modi needs to shift closer and closer to BRICS. The US has reviewed their cards and a 50% tariff is extremely punitive. Now, I want us to remember Latnik's speech to India. It tells you the administration is trying to peel BRICS countries away one at a time.
There were certain things that the Indian government did that generally rubbed the United States the wrong way. For instance, you generally buy your military gear from Russia. That's a way to kind of get up, under the skin of America if you're going to buy your armaments from Russia. So I think India is starting to move towards buying their military equipment from the United States, which then goes a long way. And these kind of things, just creating that relationship, being a part of BRICS, right? Which is, let's move to not support the dollar and dollar hegemony. That's not really the way to make friends and influence people in America. So
now, buying Russian oil is just an excuse. It's a reason to give justification to US actions. Now, India's exposure to the US is very significant. Some of the exports are essential like pharmaceuticals, but many others like gemstones and diamonds are discretionary, meaning diverting supply elsewhere isn't that easy. You'll need to slash prices down. Now, exports to the US accounts for 2.3% of India's GDP, and that's 18% of their total exports. Now, imagine a 50% tariff slap on these goods. Now there's a big urgency to scramble back the BRICS. Suddenly, the border disputes with China, they are melting away. Suddenly, Modi is in China this weekend to repair ties. And that's the main agenda. As we said many times, the only big counterweight to Washington is Beijing. By slapping a 50% tariff on India, the US has effectively driven India closer to China. It's really unthinkable for US foreign policy because now Delhi has no choice but to find a way to increase trade with the Chinese. Now, even before the tariff war, India has been buying much more stuff from China than they export out. 125 billion in Chinese imports versus 18 billion from their exports to China. In just 4 years, India's dependency on Chinese goods has grown by 76%. And this is across the board, electronics and machinery to chemicals and metals. Indian industries are being powered by Chinese inputs. And this presents an opportunity to China and a disastrous outcome to the US. By hitting India with brutal tariffs, Indian exports, they now need to find new markets. And the only way to do it in a hurry is to drive the cost of production down. Where else is India going to find all these inputs? They have to go closer with China and tap onto the Chinese supply chain. Now, as much as we hear stories about Apple making phones in India, the macro game is shifting towards Beijing. And this is where things get really ugly for the US dollar, and here's what we mean. Since 2021, India's trade deficit with China has been exploding from $44 billion to nearly $100 billion last year. In other words, India is buying from China and paying more money to Chinese exporters. Now sit back and answer this one question. Do you think China or even India today prefers to use local currencies that they control or the US dollar? Now, this should be self evident. This is the dollarization 101. The BRICS countries they're settling bilateral trade using the RMB or their own local currencies. Now, imagine what the deficit will be in 2025 during Trump's tariff war. I have a good feeling this will go well past $120 billion, maybe even more. So, more bilateral trade is going to happen outside the dollar. And this is the consequence of the tariff war. Now, which brings us to the big question. Will China, India, and BRICS dump Russia? Will they stop buying Russian oil to follow US orders? Now, the more BRICS continues to buy commodities from Russia, the worse it gets for Trump's trade war. And this goes beyond just funding the Russian war machine. Now, Putin, Modi, and Xi, they are meeting in the SEO this weekend. And a big part of the conversation revolves around energy imports. The US Russia peace talks are not progressing, and as expected, everything has stalled. Russia wants to speed run a new gas pipeline to China, the Power of Siberia 2 pipeline, and Putin doesn't want India to stop buying Russian oil. For India and China, the calculation is quite simple. Does the advantage of Russian energy outweigh the risk posed by the United States? China is definitely going to keep buying oil because their economy is virtually untouchable by the US. But what about India? Will India play ball? If the Indian economy stops importing Russian supplies, the snowball effect would be quite disastrous. Now, today they are buying well over 1.7 million barrels a day. That's more crude shipments than even China. Remember that these cargoes are paid in local currencies, and Russia probably sells them at a generous discount, at least 5 to 10%. So India has the flexibility of payments, and they are saving a lot on energy inputs. What if they listen to Scott Bessent and dump Russian oil to reduce US tariffs? China will be more than happy to absorb the excess volumes, and it will make Chinese industries even more competitive. Suddenly, India will be less competitive globally. China will grab more market share. India will be squeezed between two giants like Germany and Japan. They'll be hyper dependent on the US for their consumer market and hyper dependent on affordable Chinese imports. It's no sweat off Russia's back. One way or another, Putin will get someone to buy his oil. And China clearly understands this. That's why they're ordering more Russian gas. The new pipeline is still under talks, but the Chinese want an additional 6 billion cubic meters per year. And it should be very evident why. China wants to make cheaper chemicals and eventually export more to the world. Affordable gas is a key material in the process. Beyond that, generating cheaper power is essential to win the chip wars. That is the next frontier, and Russian commodities are going to power China's push. So if India decides to abandon Russian energy, the big winner, ladies and gentlemen, will be China. No matter where Moody looks, the future as BRICS is simply economic destiny at this point. Finally, let's talk about the Canadian economy because things aren't looking too good. It's hard evidence that you cannot rely on one single consumer market. Total dependency means total collapse once the tariffs come. Now, when I look at the numbers, despite the USMCA exemption, which many people keep reminding me of, the situation is still disastrous. Please convince me otherwise. Canada's GDP crashed by 1.6% as Trump's trade war crushes their exports. This is the biggest decline since the pandemic in 2020. It's the first contraction in nearly 24 months. Now, picture this, exports fell by an incredible 27% on an annualized basis. Business investment contracted by over 10%. This is a big problem and is a huge reminder of how quickly things can flip. Being a US neighbor used to be great. You could ship energy directly to the US, who has all the refineries and the ports to ship them out to the world. They're also big consumers as well. You could send your commodities like lumber, steel, and aluminum down south, total convenience, ease of trade, until Donald Trump came along. And now you are confronting decades of dependence all at once in the Apprentice game show. Yes, the Canadians are trying to diversify. They are trying desperately to find new customers for their commodities, and the wheels are definitely starting to turn. All exports to China are wrapping up, almost 300,000 barrels in May or June, but therein lies the crucible. Breaking away from Trump takes time, and Canada will need to go through the fire. It's going to take a lot of time and it's going to inflict a lot of pain. And there's really no two ways about it. Infrastructure and ports aren't fleshed out yet, and there's always the threat of retaliation from the US. So things aren't that easy for the Canadians as well. They're moving in the right direction, but you can't avoid the pain. You know the saying, right? It's the darkest before the dawn. Well, it's also the darkest before pitch black. It depends on how Carney plays his cards, and it's going to be a difficult hand at the poker table. The trade war has driven the Canadian account deficit to a new record, which is a bad thing. Basically, more money is leaving Canada in general than money coming in. And this goes beyond just imports and exports. This includes income and investments. A lot of money is flowing out. And in a worst case scenario, if this persists, we could see the Canadian dollar crash because demand just isn't there. The only reason it isn't yet is because the US is wrecking their own economy at a faster pace. For Canada, it's really a time of crisis. And I hope they don't wait it out, right? Because after Trump, the tariff policy could continue indefinitely. It might not be just 4 years of chaos, it could be 40 years of pain. And this is something that they have to realize. So the pressures are really stacking up for everyone. Countries are being forced to choose. And what Trump just did is really accelerate everything. Now, the dollarization was going to happen regardless, but now the timeline has been 10x faster. India and Canada now have to run faster to diversify away from the US. Instead of doing it in 20 years, they now have to do it within the next 12 or 24 months. And the picture is really terrible for the dependents. Canadian exports crashed by 13% in Q2, a $19 billion trade deficit, and energy exports to the US has also dropped. Chances are Q3 will also see GDP stay in the negative, and then Canada will be in an official recession. We all know what that means, right? Very likely more debt and deficits will happen to smooth things out. And this is just one country. We still have Mexico, Germany, and the rest of Europe bracing for impact. So hang tight, guys, because once more Q2 numbers comes out, things are going to look really nasty. Trump has started the ball rolling. The boulder is going to roll over a couple of villages and squash some towns. But at the bottom of the valley is the US economy itself. But let me know what you think. Will India keep buying Russian oil to survive? And how fast will de-dollarization get? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.